Welcome back to Property Now, where we are on a mission to make you the property pro in your group chat. And welcome back to part 2 of our holiday special series. If you haven't listened to the last episode, part 1, make sure you do that first. In that episode, we talk about the year in property of 2023. And it makes sense that today we make our predictions for what we expect to see unfold in the property market in 2024. Make sure you subscribe to and follow Property Now. Guys, welcome back to part 2 of our holidays special episode.
Feels like we never left.
Don't know how
Just like we never left.
Don't know
Wow.
how you got us to come back between Christmas and New Year's to record
I know,
this.
I know.
The kids are
I'll put that
disappointed.
this side.
I bet they are. But
you gotta do
Property
what you
Now
gotta do,
comes
man.
first.
Yeah.
Yeah.
Are we all wearing the same clothes as last week?
That's
No, I
gross.
don't
That's
know.
unhygienic.
I don't think so.
Gross.
Nah.
We're gross. Should
Same
change
coffee though.
outfits. Same coffees, yeah.
What are we
Extra
talking
hot.
about? What are we talking about, Zad?
So today we're talking about our property predictions for 2024. Who wants to kick us off? What do we think?
You always look at me, guys. I would like to hear something from
Yeah, I make eye contact
All
with
right,
all
I
of
think
you.
I should kick it off,
Yes.
Woo!
Yes.
Go,
Okay.
Jace.
Jace.
Property predictions. Look, I've got
He's
to
wrong,
talk-
guys.
That's all from me.
Okay, yeah,
All right, Michael, you're
I do
up.
want to hear it. I do want to hear
Jace, that was great.
What did you guys think?
Don't even start again.
it. No, what do you think? Sorry.
Look, I reckon. Look, from the finance side of things, from the lending, how it's always related to property.
Yep.
I think the banks will start to relax some of their lending criteria.
Yep.
Right. But still there are some things that I don't think will change. For example, the 3% assessment rate on the buffer. So that means,
You told me
when
that.
you're working out, so when the bank determines how much you can borrow or how much you can afford, it's not based on the actual rate of the loan. So if
Yep.
the actual rate is 6%, the bank's calculating and working out how much can you afford at 9%. Right. So often you'll find that some customers feel that they can afford the repayments because it's equivalent to what they're paying in rent, but they can't borrow the loan amount that they need, and that's the reason. And who controls that is APRA, right? So that's the government body that tells the banks, I want these buffers to keep the banks sustainable, safe, and have proper responsible lending practices,
The
right?
regulator.
Correct. So that's the one I think won't change.
It won't?
Because it won't change.
Okay.
Because APRA seeing that the mortgage fixed rate cliff didn't really happen,
Yep.
all the home loan customers, mortgage holders have been able to be very resilient when coming off these ultra low fixed rates.
Yeah.
The arrears on mortgages hasn't spiked, so that shows APRA that this mechanism works.
But it worked at a low rate, right? So, because
Yeah.
I'm glad you mentioned this because I really wanted to ask you about it because I thought I think this is something that could actually change. Because when you're basing it on, say, I'm getting a mortgage last year or the year before,
Yeah.
and it's at 1.9% retail, so they're assessing me at 4.9%.
Oh, so that's a good question. So in addition to the 3%, APRA actually has a floor rate.
Yeah.
So with that example,
Yeah.
they will still assess you at 5.5%.
so they're assessing me at 5.5.
Yes,
So,
so
they were
No
assessing
matter what the
yeah.
rates go to.
no matter what the rate
So
goes
back
to.
then, I'm
Yeah.
getting assessed at 5.5.
Correct.
Today, the retail rate is 6 or more.
Correct.
And I think that's a good thing, that floor
Yeah.
rate, by the way.
Has
Yeah.
to be
Because-
yeah.
Yeah.
Ultra low rates at 10 points for the RBA, at 10 basis points.
Yeah.
It's not realistic.
Yeah,
that
correct,
shouldn't be
correct.
the expectation.
But when it's low, that makes sense. But
Yeah.
where we're at now, because I'm thinking like we're getting assessed at 9.5 now, right?
Yeah.
So when you consider that inflation is coming down, so it's going in the right direction. So hopefully that continues in 2024.
Yeah.
Interest rates are probably going to be on hold.
Yeah.
The next movement, I think we've said in the past, is probably going to be
Down.
Chris
Yeah.
is making the downwards gesture. For
Yeah.
anyone listening, not watching.
I'm just assuming everyone is watching.
down,
this.
down. Yeah. So with that being the case,
Yeah.
isn't it kind of okay if we dropped it to like a 2% or something like that? And couldn't that help? We spoke in the last part about first home buyers struggling. Could that kind of help first home buyers come back if they were to make a change like that?
Yeah,
Is
look,
it possible?
it can definitely help the first home buyers,
Yeah.
because it'll increase the borrowing capacity.
Yeah.
But it was at a point 2.5% as well back then, and then
Okay.
APRA increased it to 3%. So that's the mechanisms that they're using
So
for
you're
that
saying it's
buffer.
relaxed though, but what does that all mean? Like, so let's say I've got a salary of 80 grand in 2021,
Yeah.
and I've got a salary of 80 grand in 2024. What does it mean for me?
Yeah, so some of the things that the banks are relaxing when it comes to lending criteria, for example, would be things like how they assess overtime income. So income that's variable, that's not consistent. For example, typically the banks would take only 80% of that income. So if you had $10,000 of overtime as part of your total salary, the banks would only use 8,000 of that, 80%. But some of the policies that are coming through, they're saying we'll take 100% of it.
Okay.
Right? Or for example, they will take 100% of it for all the essential workers where overtime is a common thing and it's a regular thing. The treatment of rental income, for example, it went all the way down to 70%. So even though you're earning rental income, the bank's only taking 70%. Now we're seeing some of the banks go back to 90%. Right? So things like that means that the banks are using more of your income to work out your borrowing capacity and discounting less of it.
So when you say they're relaxing, they're going to relax rules or whatever you want to call it, policy. Does that just mean relax equals I can borrow more? Is that what it means?
For certain
Simply?
situations.
Right.
For certain situations. Because, for example, if you don't earn any overtime income, the bank's relaxing their verification on overtime income doesn't apply to you.
Doesn't impact
Yeah.
Gotcha.
you.
If you don't have any rental income,
Yep.
that particular policy doesn't help you. Right, so there are things that the banks will target, and banks will target different areas depending. For example, if one bank is getting a lot of investor clients, they might relax an area that will benefit owner occupiers.
Gotcha.
Right,
To keep their book aligned.
correct,
right?
because they don't want to have all of their customers as investors. Or another bank might have a lot of owner occupied home loans, and they want to have some more investors, so they may relax things like rental income, right, to use more of the rental income so that they can lend more money to investors, right? So we are seeing that so this is what the banks can do themselves. So there are things that they can't change, which is up to the regulator.
APRA.
So for the things that they can do, I reckon that they, because the banks are not getting enough business. There's not enough new customers. Borrowing capacity is reduced. People aren't borrowing as much.
Well, they're all fighting for the same pool of mortgages,
Absolutely,
right?
absolutely, yeah.
So they
It's
need
just,
to
it's
do
just a market
Exactly
share
right.
game, like
Yeah.
30 to 31% market share, for example. Or
That's right.
capturing that market share as much as
That's
possible.
right. So the banks need to manage their own risk appetite, with what they can control. And these are the things they can control. What's their approach to a certain type of income? What type of customer are they trying to attract? Or what sort of rates are they offering? Right. That's in addition to the sort of hard requirements set by APRA. So,
Not to pitch what you do, but it's so important to have a broker on your side. I was just speaking to David from your team about my plans for next year, looking at potentially a refinance. And the bank I'm currently with, David's saying their book is pretty full.
Yeah.
So they probably won't move as much as if we were to move somewhere else. So it's just good to know what the options are, and to have it laid out like that is, I love having you sitting across from me
that's
in
exactly
these
right,
combos, man.
because they're all different.
Yeah.
Right. And they're all different at different times.
Yeah.
So it's not as if one bank will always be more competitive or one bank is always more expensive. Right.
But you need someone with their
That
finger on the
stuff
pulse that
changes.
are dealing with the banks all the time.
That's
Because
right.
if I buy a property and I deal with the banks once, I'm not
Yeah.
going to know that. That's amazing.
And the only thing you need to do really is just have the conversation.
Yeah.
Right. So it's not always like, I have to make an appointment, I have to go sit down. It's kind of old school, right? You've got to go into the branch or you go into a broker's office. You have to bring your paperwork. Really, these days, you can get a lot of information by speaking to a professional, whether it's a broker, whether it is a lender, or even a financial planner. You can get a lot of information about what you're trying to do to give you a really good idea, right? Without having the fear of I've committed to someone, right?
Yep.
You can make an inquiry, have a conversation, talk about your plans, and then you can get some really good ideas and insights on how things work.
So 2024, the year of relaxing policy then.
Yeah. And
On,
what
the,
does
on the
that
lending side.
and what does that mean, right? So obviously, we're and I think that's a good prediction.
It means one thing.
What does it? What is that?
Well,
Well, I think the banks are trying to stimulate credit,
Yeah.
right? So to make it easier for people to borrow money, not borrow excessively.
Yep.
Yeah.
Yeah.
Right? Like there are tweaks that you can do to make it a little bit easier, but it's not as if the banks want people to borrow more than they can afford, which you can't anyway.
But it's allowing people to meet the prices of today, right?
Exactly right.
Yeah.
Exactly
Yeah,
right.
okay.
Because in 2024, I think you've got the government's shared equity program coming in as well.
Yep.
Which is where the government will buy the property with you, and they may take up a 30-40% share of that.
I think we should flag that for a future episode discussion, because that's a big one. I'd like to go into the shared equity scheme.
Yeah.
Can you
Let's
give us
do
the
it.
short version? Because it's part of the prediction, obviously.
Well, let's keep that as an
Okay.
episode, because
Okay. Keep it as an
I think that the prediction there, it's going to be interesting. I'd like to see a bit more details on what they're doing, but
Cool.
I'm not a massive fan, but we'll see.
Yeah.
We'll circle back to that. Okay, so I think, like we said, lenders are going to potentially relax. In terms of, we talked about how, in 2023, we continue to see growth in residential property prices.
Yep.
Do we think we're going to see that continue into 2024? Do we think it might sort of plateau? Do we think it might decrease, at least the rate of increase?
I have some. Yeah, my thoughts are, if we do see regulations relax from a lending perspective, if we do see interest rates continue to hold and potentially move down next, we're going to see more comfort in the market. We may see supply increase. So hopefully a lot of the builders, the developers that we spoke about in part 1 of this episode, who have been holding off on starting construction or to opening up new land lots, they may bring their projects on, early, mid, later next year.
Well, and that is quite tied to if interest rates decrease, right? Like
or stay the
developers
same. Yeah.
There's some certainty around some of the
Just
Yeah.
costs.
certainty. So if all of those things happen, which to be honest, it kind of looks like, if like just on today's landscape, it looks like all of those things are possible. Then that would mean that prices will, we should see some consistent price rise.
Okay.
And I'm not talking about phenomenal rise. I'm talking like 5, 6, 7% across the board. Obviously, every suburb's going to be different. Every state's going to be different. But as an across-the-board median, I reckon we'll see things lift a little bit. And I just think with all of those things in mind, it can't look any other way. Does anyone disagree with me?
Oh, look, I'm not. I don't want to get into the price rises, because it's very difficult to predict. So
Yeah.
I don't want to get into the price rise. I'm more talking on the activity and what might happen in the market. So I think interest rates are on hold. They're coming down, I believe, next year in 2024. We all know what happens when interest rates go up. It comes back to your point that prices generally will adjust, but how much, we don't know.
We don't know.
It'll stimulate activity in the economy. I think 2024 is going to be the year of, if 2023 has been the year of talking about housing supply, I really hope that 2024 is the year of building the housing supply and actually stop talking about it and let's get into it. Let's start building. And I really
we
do
need
think
to, right? We continue to have a growing population. Like it's only going to get harder to house.
There's only so long you can talk about an issue until action actually needs to happen.
Yeah.
So I think it's now time that action needs to happen into the housing supply issue and start building. And with rates leveling out, or maybe going down, as I've said, that's going to provide a bit more certainty to developers to get their projects out of the ground. It's going to provide a bit more certainty to home buyers or potential investors looking to purchase in those projects, which will help them get out of the ground. So I'm really thinking next year is going to be the year of project launches happening.
So
So, Chris, if the rates don't go down and they stay stable, do you think that'll still give the developers some confidence in terms
absolutely.
of starting projects?
Well, because it means that they've looked at their feasibilities, they've seen where rates are, they might even be factoring increases to be conservative. And if they can get the projects up and running off the back of where their feasibilities sit, any downside to the rate rise would mean that that's just potential cream for the developers in their projects, and it helps them get to the next stage of projects, which will then help supply even further.
If you're enjoying what you're hearing so far today, make sure you check us out on our socials, where we share behind the scenes content, exclusive takes and deep dives into topics that you might not hear us talk about in the full episode.
And for finance, because I don't do any sort of development finance, so when developers get a loan to build, is it the same options as a fixed rate loan, or it's a variable loan, or is it typically?
So typically there's what's called, so there's probably application fees and whatnot, but then there's a line fee generally.
Yep.
And so what they've got an all-in rate, but they have a line fee above what's called BBSY. So this might be getting a bit technical.
Yeah. But is the rate fluctuating?
I have 4,000.
You can fluctuate, absolutely.
Or can they lock it in? For example, if they're going to build a
fix?
project for 2 years, can they fix it? For example, someone who's going to do a renovation, like a consumer.
Yep.
You know what? I'm just going to fix it because it's going to take me, like a year to build this house.
No, so most facilities that I've seen has a facility fee or establishment fee.
Yeah.
They have a line fee, so it could be 2% plus what's called BBSY, and I'll come back to this. And then it could be an interest rate of 2% plus BBSY. So the 2% generally stays fixed
Yeah.
throughout the development. It could be 1% depending on who you bank with.
Yeah.
But the BBSY component is what moves.
Oh, so it's
that's
still like a variable rate. isn't
That
it? So it can
BBSY
change.
component is the variable part,
Right.
plus the margin. So plus the line fee,
Yeah.
or plus the interest rate. And the difference between those, the line fee is on the whole facility limit, and the interest rate is on what the developer draws down.
Yeah. So
on-
really, stability of the interest rate makes a big difference to the developer's
Stability or
outlook.
going down, right?
Stability or
So
going
that
down.
was some of the
right.
issues when construction was happening and builders were developing their projects, or
Yeah.
developers going through their projects. When rates were going up,
Right.
they're already in mid-construction, so the rates are going up, eating into their margins. So they're just building these projects, and in some cases, not making any profit
Wow.
as they get through to the end. That's the uncertainty.
Jeez.
And I assume, you know how, like you were just saying, retail home buyers, they
Yeah.
get assessed on plus 3% of
Yeah.
whatever the rate is.
Yeah.
I assume that's not the case for developers
No.
because it's
It's based off the
it's
project.
based on selling down. the
Yeah,
project.
yeah.
Well, generally, it's based off
Yeah.
the project. It could be, and obviously the strength of the sponsor, so the who the developer is. That's
Yeah.
and if it's based funding on the project in isolation, it's based on the strength of that project. Yes,
Very
pre-sales that can be
interesting.
achieved.
I think this is like a whole other episode as
also an
well
episode,
because
yeah.
not gonna lie, you lost me there for a minute. I
Yeah.
think my eyes
Trying to
started
skim it based off
to glaze over. Very technical for me, Chris. But I think that is like a whole other episode where we like deep dive into that because I'm sure if our listeners are anything like me, they'd be interested to understand that a bit more.
Yeah,
Good,
sure.
we're getting like 15 new episode ideas.
I know. I
from
hope
this
PJ's
episode.
writing this down because
Yeah.
I'm there's too many ideas these last two.
Hint, hint, PJ.
If you're not, start writing.
But yeah, look,
Awesome.
2024, I see projects coming out. I mean, I do see projects getting out of the ground, now starting to get under construction. And I'm hoping 2023 was the year of talking about housing supply, and 2024 is the year of, and beyond, are the years of delivering that housing
addressing
supply.
You're always super positive, which I freaking love. You always find like what's good, what could happen, what needs to happen. But if we look at media headlines and topics, which is what we talk about on this show, a lot of the media headlines are more doom and gloom. And in 23, it was around supply and Bank of Mum and Dad and all this sort of stuff. What do you think the media headlines are going to be in 24? Because it's not going to be like supply is great and everything's rosy.
I always say to the team, there's always a silver lining to any
Yeah.
negative situation. Every cloud has a silver lining, and you just got to find what that silver lining
Yeah.
is. And I suppose there's been rental crisis in 2023. There's been a
Yeah.
housing supply crisis, but the silver lining to me is now we've got a whole industry, from government to developers to agents to financiers. We've got a whole industry now focused on delivering housing supply. So that's the silver lining I take, and that's going to help people get into property in the new year.
We might
The me-
start to see a shift in.
Media plays such an important role in directing how the conversation goes, and I think media's done a great job to help expose the housing supply issue
Yeah.
and bring it to the forefront of discussions. And as we saw in that boomer versus current generation discussion, it's a very talked about topic, and people want to talk about housing, right? Because it affects everyone. No matter who you are, it affects you.
Yeah.
So I think the headlines next year are going to be, I'm hoping housing supply gets out of the ground and
Yeah.
governments deliver on housing supply. But
less construction
maybe-
crisis and
I hope-
First
more-
home buyers are back.
I hope-
Yes,
I hope
me
less,
you're right.
less
too.
builders
I could
going
see
down. I
first-time
really
buyers
hope
back.
there's
Yeah.
less builders going down.
That's been a big story in 2023, hasn't
Well,
it?
because
Yeah.
I mean, the little guy always little guy or girl always gets hurt in that situation, being the contractors and the tradies
Yeah.
on the ground, which sucks. It's never a good scenario for a construction company going down.
Oh, and it's crazy the impact for the customers, right? Like whose properties are half
Yeah.
built,
Yeah.
Yeah, you see those
right?
awful stories.
And they've had delays and
Yeah.
delays, and I've seen one where they've only done the frames, and because it's been out in the weather for so long
Yeah,
and exposed to the elements, that they have to pull it all down.
and it's very hard to replace
So-
a builder midway.
Man,
it's very, very
unbelievable.
difficult.
Oh, is that
Really?
right?
You don't want to do it as
Yeah.
a developer or even as a homeowner, but it's very difficult to actually, from a certificate point of view,
Right.
Right.
certification point of view. If you come in midway, you don't know what the other builder's
Yeah.
done.
Right.
As a
right.
builder, it would be a
Yeah.
risk to take
And
on
you may
the
be
job.
responsible for, whatever
That's very
issue that
true.
has nothing to do with you,
Correct,
right?
yeah.
But it's
Yeah,
happened a
wow.
lot in the last year.
It's
you know.
happened a lot.
Oh yeah, it was the story of 2023.
Yeah.
So more positive
Definitely.
headlines. Well, if I know the media as well as I do, positivity, non-clickbaity headlines is what's
Probably
what's
not
gonna
going to happen.
I
but
definitely think there's not going to be any clickbait headlines.
we can. It's a very big call. I think you might be wrong there.
100% wrong.
We can be optimistic though. We can be hopeful, and it would be nice to see. I mean, again, it's not going to happen because we know how the media work, but to see less like. It's fresh in my mind because we've recently had that generational discussion, but it would be great to see less blame game being kind of thrown around in terms of property and like looking to who needs to be held accountable and kind of, you know, like thinking about how we can actually solve the problem rather than just throwing blame around and, you know, it's someone else's fault that this is affecting me.
Maybe this
Be
is
good to
turned into
see.
what we want to happen. Maybe
What
not
we want.
what's going to happen.
Yeah,
I mean,
true.
Well, you have
Our
to
wish
manifest,
list.
right?
Yeah.
It's our wish list for 2024.
I'm sending it out to the universe.
I want to buy a
What was
home.
it?
That's my
Friends?
manifesting.
Well, on that, right,
Unagi.
do you? And this is a question for you, and for anyone. Do we have personal like property goals or like New Year's resolutions?
I'm going to buy a house in
Is that your? So
2024.
that's your goal?
What's
Well done.
give us your 2024s
Yeah.
as?
Like obviously just in terms of property. Yeah, well, I want 2024 to be the year that I enter the property market.
The first home buyers are back. There's the headline.
Yes, that's hopefully my headline of 2024. And yeah, just sort of like you know, I feel like it's been a long journey for me to get in a good spot financially to teach myself and to, you know, learn from people around me who've kind of paved the way, good financial behaviors, and it's taken like admittedly and embarrassingly, it's taken me like a very long time to learn, you know, the importance of saving and long-term planning in terms of my finance. And
Don't be embarrassed. You're still well below the median first home buyer age by like.
Oh, she
What?
wasn't until you said that.
No, that's what. No, you're
no,
well.
I know,
You're
I
well
know,
below
I know.
that.
Yeah, what is it, 36? I mean, I haven't bought the house yet.
She's well below it. No, but I'm just saying, you got heaps of time.
But you could be like, you're well below the. I'm like, oh, that doesn't sound like a good thing. It's a good thing.
That
I'm
is
well
good.
below.
That
the
is good. Yeah, I don't know
average
why
age.
you guys are.
I'm not getting the joke.
laughing. Yeah, I don't get it either.
He's
Jace
like,
thinks it's funny.
don't
so.
be embarrassed.
Because she said I'm embarrassed. I said don't be. I'm just being
Oh,
annoyed.
It's like-
did she
it's
say
like
she's
we-
embarrassed? I didn't even hear that.
I did.
Start listening, Jace.
Get him headphones. He needs to listen.
No. So
Start
yeah,
listening.
no, Michael's right. I did say it because yeah, I think, and it's kind of that. I'm going off topic a little bit here, but it's kind of like that whole comparison thing. Like, you know, I say I'm embarrassed because I look at the friend next to me who's, you know, already
Yeah.
owns 2 properties and has, you know, X amount of money in their savings and has this much in their super, and I'm like, oh my god,
You know a lot
what did
about
I
your friend's
do?
financial situation.
Yeah,
Through that WhatsApp group chat.
a
Oh, no,
WhatsApp.
Messenger group chat.
Hey,
the
Ens.
gals, the girlies. So yeah, but no, I'm not embarrassed. I'm going into 2024 optimistic that I have, you know, worked hard and I've learnt a lot about, you know, how I'm going to make this big move, and I feel scared but confident, and yeah, I feel good about it. So that's my
That's awesome.
2024.
That's
I
pretty
love it.
cool.
The beauty is we can keep
Thank you,
you
guys.
accountable every week.
Well, now the
Right,
listeners
yeah.
can too, because
Every
they're
day.
going to be waiting for
How's
me to
that
be like,
Are you
I
a
got the
homeowner
keys.
yet?
Yeah. How's that going?
Yeah.
Are you a doctor yet?
So you got a
No,
lot,
sorry,
you got a
Mum.
lot of that.
Are you a dentist?
What
Yes.
about you guys before we wrap up? Any like property goals? I think that's kind of nice. Like New Year's resolution, property
Sounds like
related.
you might have a few.
No,
right?
well, I used to be big on New Year's resolutions and goals and things like that. It was like I always found it a great time to reset and reassess. But what I kind of found after a few years of doing that is they're always kind of the same goals. So like it's not
which
like
meant you weren't achieving.
No, no,
them.
it's
Lose
not-
weight. Yeah, it's all the same crap.
it's
right?
not that I wasn't achieving them. It's
Right.
like these got like big goals take time to achieve.
Yeah.
You're not like it's not like, hey, new year, let's start again for just because we did a countdown at midnight yesterday. So for me, it's about just continuing on with like good savings habits, like
Yep.
putting as much into the offset as I can,
Mm-hmm.
trying to get myself into a position to achieve some of those goals, because I think 2024.
Awesome.
Well, I think 2024 and 2024. We spoke about how 2023 was like a bit of a holding pattern year.
Yeah.
2024 might be a bit like that, definitely at the start. And so, but by the end of 2024 into 2025, I want to be in a position where I can take advantage of some opportunities. So for me, it's like just continuing, you know, save my money in the offset, think about renovations, think about what my next move is, whether it be an investment or a bigger family home, and try and get there. So that's it for me. Like, if anyone has any advice, please.
I love that.
But yeah,
Optimistic.
yeah.
I love it.
Chris?
I always hate New Year's resolutions as well. I think the best time to make a resolution is now.
Yeah.
Just do it. Why,
Yeah.
why do you need to, like, it's December.
Yeah.
Why,
No,
why do
exactly.
you need to wait till
Start
the 1st
now.
of January to make, just start.
Yeah.
You know?
I
Doesn't matter
agree.
when you start.
Yeah.
Personal property, I actually don't have any personal property goals.
No.
But, I mean, with what we do here at Coposit, I'm fortunate to see so many
Yeah.
goals get achieved every single day.
It's pretty cool.
From a lot of our customers, which is amazing. We're so ingrained in the property space that we see people achieve home ownership or buy that next property or downsize into their dream property every day.
Yeah.
So, I can feed off the back of everyone else with achieving their property goals. But yeah, for me, no.
That's what you want to
particular
see in
property goals.
2024.
But that
More
is your-
people.
That is your
achieving
personal
their-
goal.
Yeah.
Is helping others achieve their personal goal. I mean, that's
it's
why
great
we
to see.
do what we
Yeah.
do.
That's why we do what we do.
Yeah.
And it's amazing to see it.
What about you, Jace?
For me, I think it'll just be doing the things that I advise my clients to do myself.
Yeah.
Oh,
It's so easy
Yeah.
Follow your own
to
advice.
just dish
Yeah.
out advice and say you should be looking at your budget every month.
I got a story when you're done
Right?
about
Yeah,
this.
this is what you got to do. Reduce leakages, review your insurances, utilities, all these fixed recurring expenses, right? So I say that to a lot of our customers.
The insurance one is that always gets you because no one looks at insurance.
Yeah,
That's a
right.
big one.
And then
it
when
goes
you
up
compare,
substantially every
and
year.
you're saving $300-400, so much better than having to cut out the coffee,
Yeah.
and then make it at home.
Yeah.
Yeah.
But that's the stuff that I preach to our customers. But then
Take
when I
your
think
own
about it
advice.
myself, I'm like, I've set a calendar invite or like a task every month to look at my budget, but it just pops up on my phone. I'm like, oh, review budget.
It's the reoccurring
Nah.
expenses as well. That's what gets you.
Yeah, so I think just looking at your finances regularly, consistently, is more than enough, because when you look at it, you're gonna have ideas, you're gonna have action.
You can't ignore it.
But
You
all
can't
you got to
hide from
do
it.
is just look at it. Look at how much you
Pay
spent,
attention
where
to
you
it.
spent it on.
I like that.
Right? You don't have to create all these 17 to-do lists
Yeah.
and this and that.
That's
and,
a great
and like
one.
what you said,
Yeah.
Michael, like not the massive goals.
Yeah.
Just looking and paying attention to your budget, your
Yeah.
expenses, and now it makes it so easy. Like a lot of the banks have, things in place that,
Like
that
the
show,
budgeting tools? I've seen them on the-
that shows you where you're spending your money,
Make use
Yeah.
of those.
what's happening,
But
right?
like we said,
worth-
just because it's January 1, not December 31, doesn't mean your goals are different. Like,
Correct.
it's still the same. It goes
No.
back to your
Yeah.
point. And a little you definitely need to take your own advice, because full disclaimer, you're my mortgage broker. And a little over 2 years ago, we had a discussion about, should I fix my rate for 2 years at 1.9% or 3 years at 2.1%? And I said, man, I want to be under 2. So let's do it for 2 years. And you said, are you sure? Like, are you sure you don't want to fix it for 3 years at 2.1%, which would have been wonderful.
Hindsight is a powerful thing.
And this year when I fell off the cliff, I said, Jace, I should have listened to you. And you said,
Yeah.
Told you
I
so.
should have listened
I
to
should have
myself.
listened to
Did you
me.
not fix it?
Yeah. He said, I should have listened to me as well.
Oh,
So
no.
definitely give yourself,
Because
like,
you're so
take your own advice.
consumed, right? You know, like I was saying to my colleagues in the industry, we're talking to customers every day back then when rates were so low,
Yep.
and ignoring our own home loans
Yeah.
because I'm not even looking at it. And then by the time the rates were going up, we're like, oh, how come I'm not fixed?
Yeah.
Because
Yeah.
I just never paid attention.
It's focusing on everyone else.
Yeah,
Well,
right.
So pay attention.
100%.
And-
Pay
yeah.
attention to your own stuff. Just look at your expenses and your transactions. And every time I look at it, I find something. You know, like I never noticed that we were spending that much money, for example, on a particular thing.
Yeah.
Or, wow, we could cut back here. Oh, I didn't know that the insurances were this much, right? I really should be reviewing this.
It's like when you
Yeah.
when you go to a
Great
restaurant and you
advice.
tap, it's like, oh, you spent $400 at restaurants this month. I'm like, oh, fuck.
Yeah,
Yeah.
But in that one transaction, you're like, oh, yeah, it's for a
Yeah.
birthday. It's a big celebration, right? But then when you look at it for the month, you're like, oh, I had a big celebration here.
Yeah.
I had a big celebration
everywhere.
there. I had another big
Saturday's a big
celebration
Every
there.
day is a big
celebration.
celebration.
Every Saturday's
Okay.
my birthday.
But it feels like that was a once-off, right?
Yeah.
But when you look at the whole month in review, you're like, man, that's like $2,000 of celebrations for that month, right?
Got a lot to
Maybe
celebrate,
something
I
I need
guess.
to change,
December.
right? So,
I'd
I
like
Yeah.
think that's good advice. Yeah,
The-
take
the-
your own advice and
There's one other big thing that's going to happen in 2024.
Hmm.
You mentioned relaxing of policies.
yeah, right.
There is going to be a major relaxing of policy occur, which we'll be privy to. But stay tuned for that.
Oh, I love what you're doing
Ooh,
here.
cliffhanger.
Yeah, I love what you're doing here.
I don't
Stay-
know what you're
stay
doing here,
tuned
but
for
I'm
that.
excited.
Yeah,
Australia, be ready.
yeah.
'Cause it's going to
Ooh.
change the game.
Clip it, Peach.
Mic drop.
I'd also love to hear what our listeners' goals for next year are and what they're doing as well, because that'll be pretty cool. just
Yeah.
to see what they're doing. And
Yeah, no, we love hearing from the Property Now community, so that would be fantastic. one other thing, like I'm excited for more Property Now. I mean, this is
it's
our
been good.
first Christmas together. It's I get sentimental. I know. But no, this has been, I want to say it's been an epic year, but it's really only been a couple months that we've been doing this now. But I'm very excited for more Property Now. All the big topics, all the predictions that we're expecting, the things that we're not expecting, we'll be covering it all in 2024. So yeah, I enjoy the rest of the holiday break, guys, and looking forward to being back on the couches in 2024.
Cannot wait.
Thanks for having us, Saz.
Thank you, guys.
We're done!
Yay!
That was great. No, keep the headline.
The Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and they are general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.